Hey traders, we're back for another recap. This is for Thursday, March 24. And as you can see, the most obvious thing is price got above the upper trend line. So think about what happened. They gapped above the other day, this lower part. They were in the middle for one day. Today they opened down here right in the middle and fought to get above. And now they're right in this zone. I've put some dashed lines here between 547.43, 549.68, kind of just a first pass at a zone, which they're currently at. In fact, if I go to the futures, here's where the market closed, 4:15 p.m. for the futures, and they've steadily climbed, 20 points or so, maybe down a little bit. So they're up in this zone now. So my question is, will they gap above this at the open? That would give the bulls more room to run a little bit, but this whole area is going to be resistance, and we're going to see what happens in the morning. But it's not too surprising that they closed right at this important area. I wouldn't call the market bullish at this point. This is the 50-period moving average. That's the blue downsloping line here. And they're below that. If we go to the weekly chart, it's the same story. They're below the 50-period on the weekly chart. By definition, that's bearish. Let's go to a monthly chart since we have about one more week or so. Just imagine what would happen if price went up and closed and made kind of a huge tail candle. I mean, this already is a tail candle, but price could continue to go higher and close somewhere in this neighborhood and have this big tail candle on higher than average volume, not a ton of volume, but pretty high considering. And what did they do? Well, from this run here, price has been going all the way up, found a high, came down right to the 50% retracement or thereabouts. Anybody who's taken that E-mini 101 course knows why this area was important. That was the bottom, at least right now, on the monthly chart. So to get things in perspective, this is where they are at. Bulls are trying to climb back up, break above some resistance areas, get up to where they can get possibly above these other moving averages. It's not going to be a walk in the park. They've got their work cut out to get up here, but that's what they're trying to do at the moment. Here are the levels that were put out this morning, 9:08 a.m., before the opening bell, of course. And here's the level, and then it kind of coincides with the trend line. That's the upper trend line. The lower trend line was down here. In between that, there was another trend line that happened to intersect 530.40. That was a level there. So you can read that. So take note what the levels were and what the game plan was here. So at this point in the day, 9:08 a.m., I was looking at my schedule thinking that as much as I would have liked to trade, I knew I was going to be too busy. So I was anticipating that it probably wasn't likely that I would trade. So I didn't trade. I don't have a recording of anything. In fact, it was somewhere in the neighborhood of 11:30 or so before I even looked at the market for the first time after I sent this out. So no trades for me, and I missed some opportunities because here's what happened. So here are the three levels and the upper trend line here that price hit. So while they did mess around with 536.08 for a while, we give them time to pick a direction. And so by 9:45, it tends to work pretty well. Give them 15 minutes from the opening bell. They're up here and they're going up. So it's pretty obvious. Now you're looking for a counter trend trade at the next level. And it worked. 540.43. They got up to 540.40. That's 3 cents shy before they pulled away. But that's not a problem because we adjust our levels with a 5-cent buffer. So 540.43 becomes 540.38. And 540.38 would have triggered your trade. They pulled back probably around 10 points or so. So there's your 4-point base hit at least. And then they get above and they continue higher. This is not a near miss here. They got up to somewhere in the neighborhood of 543.30 something. So 40 cents, that's 4 points in the E-minis. A lot of times you'll see them react like this at 40 cents away from a level. But when they got to the level again, 543.72 or 5 cents down, somewhere in that neighborhood, then they pulled away again, at least 4 points, but obviously more. Base hit number 2. They're hitting this level again here. You're not going to short it again because you don't know when they're going to get above this because the goal of the bulls is to get above this trend line. So you know this from the big picture. They get up to the trend line, not surprising they pull away. That was a trade there. More than 4 points. Call it 544.37, somewhere in that neighborhood. Hit it, triggered a short trade in the E-minis, pulled back. You got 4 points or more there. You're not going to trade 543.72 on the long side, although they did bounce. I want to give it more time before I would do that. So that's not a trade, but they got above this trend line. And while they did bounce from here, this was the real bounce. Would you have taken this trade? The point is you already know this level here is still viable for support, and the bulls want to be above the trend line. So this whole area is support. So going long there is certainly viable. So we're counting this as the 4th base hit of the day. And at this point, they continue higher. And if you look at something like this, here's a trend line from, let's call it this little high here. They're making some highs. They pull back from this area. They pull back again. They fight it. They get above. They bounce off this level. At this point, the market's telling you that this is a trend line in the making. Now, this is just a 1-minute chart. I typically don't run a trend line on something so like a 1-minute chart, but I just want to point out that it's not surprising that they came down and bounced off this same area later in the day. This is not a trade I would have necessarily taken because it wasn't a level, and I've already traded this trend line on the long side. But just to show you, this is what price typically does. Starts to tell you, gives you some clues along the way. This could possibly give you more opportunities to take other trades. We're counting 4 base hits if you're playing by the rules. And again, I did not trade today, so there is no recording of any live trades to look at. Here is the tracking log, playing by the rules. These are all the levels, 2 levels and 2 trend lines. You can read the notes to see that the trend line was here, 544.37 at one point, and the other trend line, when it came back down, or for the recycle trade, was at 544.17, a total of 16 points, and you can look at all the metrics if you like. And my trades, nothing, or at least my log, no trades for the day. So that's it for Thursday, the 24th, short and sweet. Thanks for watching. I hope you found some value in this. We have one more day in the week. We'll dig into some big picture things most likely. I would like to get a recap video out tomorrow. That would be Friday, but it might be sometime over the weekend. We'll see how it goes. I've got some things planned, and I'll be busy most of the Friday afternoon. But tomorrow morning, there will be new levels and a new game plan as usual. And just a reminder, it'll be the last time that the levels will be sent out to those on my list. Starting Monday morning, the levels and the game plan will be accessible via the daily levels subscription at Ticks&Trades.com. And for all of you who took advantage of the discount that I gave my early subscribers to the E-mini Trading 101 course, tomorrow is also the last day for that. I might extend it through the weekend, but if you're interested in it, maybe you missed that email that I sent out to everyone, just shoot me an email at sams@ticksandtrades.com or put a comment below, and I will send you a link where you can get that discount. So thanks again for following along. I do appreciate the support, and I hope you are learning things. I'll talk to you again soon. Have a great day.